All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you as usual. And I want to talk about something that I've sort of kind of pieced together, and I'm just jamming the square peg into the round hole, probably, but very interesting to think about. So the first article I want to talk about is that Coinbase is basically starting a lobbying group for Washington, D.C. And this is a relatively old story, but it is relevant to what is happening now. So cryptocurrency bigwigs are banding together to form a political lobbying consortium that will take the industry's hardest policy-making issues directly to Washington, D.C. The NGO, known as Blockchain Association, is trying to become the go-to lobbying organization on political and legal issues that challenge cryptocurrency and blockchain companies. So that's basically all I want to talk about with this little short article that I think was from like September. And it's interesting that just now lawmakers are proposing a bill or a change rather to exclude cryptocurrencies from being securities. So just a few months ago there was a lobbying group for Washington, D.C. And I think we all know by now, but for anybody that doesn't, lobbying group is basically like, hey, I'll give you this money if you make your policies that affect me and all my crony buddies. And I'm not really calling Coinbase necessarily cronies, but you get what I'm saying there. Hey, why don't you, I'll give you money for your campaign because you can't win without it, so I'll give you money for your campaign, but you know, after a year or two in office, make sure you go ahead and try to pass this bill that will help me out a lot. So I want to read this. Two members of the U.S. House of Representatives have tabled a new bill before the Congress on Thursday to exclude cryptocurrencies from the standard securities laws. And this bipartisan bill, called the Token Taxonomy Act, was presented by Representatives Warren Davidson and Darren Soto in Florida. And Representative Davidson hosted a roundtable in Washington, D.C. to discuss the cryptocurrency-related bill and regulatory shortcomings. And this is all over the crypto world right now. Like, virtually every single crypto website or news or Reddit is basically posting, maybe not this particular article, but the same story. So more than 50 participants from the financial industry participated, including experts from Fidelity, NASDAQ, State Street, Andreessen Horowitz, and the U.S. Chamber of Commerce, probably Coinbase as well, and their lobbying group. The bill, if passed, will amend the Securities Act of 1933, the Securities Act of 1934, and is seeking to exclude digital tokens from being defined as securities. So, this is the act right here, the Token Taxonomy Act of 2018. So, basically, in 1933 and 1934, they had to make a Securities Act, and I think it was actually because of a citrus farmer in Florida was trying to sell shares or something like that of his company, and before that, there was no real laws on that, or at least any not necessarily clearly defined, so we had to clearly define what a security is and what a security is not. And unfortunately, or maybe fortunately, who knows, cryptos are not really quite defined yet. At first, the SEC sort of defined it as, okay, so Bitcoin is not a security, right, because it has its own blockchain, and nobody really profits from Bitcoin, essentially. Sure, you can mine it, you can trade it and stuff, but no company made the blockchain. Then you have, like, Ethereum, which is in question as well, and quite reasonably so, but they have their own blockchain, but all these ICOs and stuff run off of that blockchain, so that's in question. Then you have things like utility tokens and such that companies will make and be like, hey, like this is our security, this is our utility token, and you can buy this and then buy our products or have essentially share in our company. And if a company is essentially rising by their ICO that they put out, that would be more of a security, but still not well defined. So basically, in a nutshell, this law wants to remove that it wants to exempt cryptocurrencies, essentially. You guys can read this if you want. It's not hard to find, the Token Taxonomy Act of 2018. But let me show you this. This was on the cryptocurrency Reddit, and somebody just basically put a couple little tidbits of it. So one of them is to amend the Securities Act of 1933 and the Securities Act of 1934 to exclude digital tokens from the definition of a security, to direct the Securities and Exchange Commission to enact certain regulatory changes regarding digital units secured through public key cryptography, and to adjust taxation of virtual currencies held in individual retirement accounts to create a tax exemption for exchanges of one virtual currency to another, and to create a de minimis exemption from taxation for gains realized from the sale or exchange of virtual currency for other than cash and for other purposes. And it says another nugget, gain from sale or exchange of virtual currency in general. Gross income shall not include gain from the sale or exchange of virtual currency as defined under section blah, blah, blah for other than cash or cash equivalents. Very interesting. Coinbase also had recently sent out somebody who basically owns the USDC coin. You know, they're basically in the lobbying industry. I can't remember her name, but it was a woman, and they basically deal with Coinbase and USDC. So this is very interesting. So these last two things are very, very interesting. So gross income should not include gain from the sale of virtual currency for other than cash or cash equivalents. So what does that mean exactly? Well, cash equivalent, that's really questionable, but cash, well, that's pretty clear. So if I take my $1,000 in Bitcoin or $100,000 in Bitcoin, let's just go hard on it, I suppose, and I sell it on Coinbase, you know, for fiat, and I take that fiat and I withdraw it to my bank account, and I probably don't even need to withdraw it actually, because that's a fair trade that I traded for fiat. So now I have $100,000, and now there is capital gains tax on that, and regardless of whether I held it for a year or short term, there's capital gains on that. So long-term capital gains are anything you hold for like over a year, and then short-term is you know, anything under a year, and short-term taxes are higher and long-term taxes are lower. Great. So that means I can't do that without being taxed. But what it does mean is that I could sell my Bitcoin to USDC and not be taxed at all for that. So that's going to help out the institutional investors greatly. So now all these institutional investors will be able to buy Bitcoin, trade it for, you know, Tether or USDC and this, that, and the other thing. So I think in my head, in my little conspiratorial mind, that Coinbase is lobbying DC. They lobbied these senators, these representatives, to essentially create this, this proposal, if you will, to make exempt cryptocurrencies for anything other than cash equivalents. So I think what they're trying to do is make USDC massive. You can also see it with Coinbase now. You can see that with Coinbase right now. They keep adding new currencies, but they're not in USD. They've dumped the fiat pairing, essentially. And sure, you can still fiat pair Litecoin and Bitcoin Cash, Ethereum, and Bitcoin. As far as I know, there might be more. But either way, they keep adding more currencies, and they're also poised to, if you've read a lot of articles lately, that Coinbase is also poised to start adding tons of new cryptocurrencies to their platform. So they're going to start finally catching up to the world, like Binance and Poloniex and basically any other exchange that has way more currencies than Coinbase does. So they're going to add all these currencies and tokens, coins, etc. And they're not going to be trading in fiat pairing. No more euros, no more USD. I'm almost certain that they're all going to be added under the USDC pairing. And I think one day USDC may end up being the digital currency of the world. Now, that is going a little crazy, I get it. But we all know, and we all know in our hearts, that someday the world is going to go to a stable coin or some kind of digital currency. And it's going to be country at a time, of course, and I don't mean to one world government everybody, that everybody's going to use the same coin, but pretty much everybody uses US dollar now. It is the king currency. Now, there are other currencies that are worth more, like the euro, I think the pound is as well. But let's be real here. Everybody uses fiat. Well, you got to use it for oil. You got to use it for transport. You got to use it everywhere in the world for the most part. And why not use a stable coin? Why not use something like USDC that is always sort of stable to some degree as opposed to fiat? Because I think governments are getting very interested in some kind of stable coin or digital currency, and it's not going to be Bitcoin. First of all, Bitcoin is way too slow, deflationary, which is not good because eventually everybody in the world wouldn't be able to get any Bitcoin because it'd be so hard to get, maybe fractional amounts at best. And with that, it's deflationary. It's way too slow. And the governments can't control it either. They can't really. It's still sort of hard for them to find transactions, even though it's not anonymous per se. Bitcoin. It's still difficult for the government to put together transactions, and all I have to do is go beep 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 in a wallet and change my public key, and that's going to make it even harder for them. So a stablecoin is something that they're going to be very, very interested in one day, and I think that Coinbase is lobbying Washington D.C. right now to exempt these so that all the institutional investors can buy into Bitcoin, sell to USDC. They're going to add a bunch of new currencies to Coinbase, but only in pairing in USDC, and they're going to make it king. And that is my thoughts on all that. So let's move on to some other articles. Real reversal. Yesterday was the highest volume day in Bitcoin history. So 2.3 million daily Bitcoin volume. Data compiled by the fund manager known as Twitter as Crypto Quantamental confirmed Thursday had become the day with the single largest amount of Bitcoin changing hands. So a total of 9.1 billion in total trades. So the figure tops the previous record, which had come December 7th in the third busiest day on February 6th this year. So a total of 2.266 million Bitcoin were traded the other day, and the second place was 1.9 million Bitcoin, and the third place was 1.8 million Bitcoin. So he says, I've gotten some critiques that this Bitcoin volume spike is only due to the price. They prefer value traded. Both are important in their own ways. And he says this critique is false. Take a look at the Bitcoin volume comparisons, which were much higher. So it's not even close. This was the highest volume day in Bitcoin history. It wasn't even remotely close. So the 21st of December, actually the 20th of December, yesterday was the biggest here. So just unbelievable volume compared to any other day. So pretty intense, guys. So there is a very bullish sentiment going on right now, and maybe we'll finally see that reverse of prices after a whole year. But pat yourselves on the back, guys, for holding on in staying in the crypto world, not being a capitulator, and holding on for an entire year. Whether you sold at the top and are just now buying, congratulations for still being in it all, I suppose. So another one is Bitcoin difficulty drops another 7%. Bitcoin will be easier to acquire from miners as the network had another downward difficulty adjustment for the latest recalculation period. This means that the currently lowered hash rate, which stabilized around 43 exahash, would ensure a higher probability of finding a block. Current mining levels show a tentative recovery up from lows around 33 exahash as the exodus of miners is stemmed for now, with Bitcoin prices touching the 4,000 level. And mining may continue to be viable, especially with the lower difficulty. However, a low difficulty may be beneficial only for a short while. If many miners return to the network for the higher potential reward, difficulty is just going to start to inch back up, and any signs of a Bitcoin recovery are eagerly sought as its current rally took us to 4,100, and the Bitcoin price later retreated to 4,000 and briefly dipped under 4,000. But for now, a longer and stronger rally is seen as rather improbable, but I believe I think we're going to get there sooner or later. I think back futures is definitely going to hype up, you know, once January comes around. And for the final article, officials at top Korean cryptocurrency exchange Upbit have been indicted for fraud. Officials at South Korea's largest cryptocurrency exchange Upbit have been indicted for fraud. They allegedly made bogus crypto orders worth approximately $226 billion to around 26,000 investors and sold 11,550 BTC to 26,000 investors. Pardon me. Upbit has denied the charges and insisted that it did not commit fraud, engage in wash trades, or trade cryptocurrencies it did not own. So 3 officials at South Korea's largest crypto exchange, Upbit, have been indicted. So according to the Southern Seoul District Prosecutor's Office, a board chairman, a financial director, and a working-level official of the exchange allegedly opened a fake account around September last year, and the news outlet conveyed. The prosecutor said the officials made bogus orders worth 254 trillion won, which is, again, $226 billion, over a period of about 2 months to inflate the currency transactions and lure more customers. The publication detailed, adding, while rigging transactions, they actually sold 11,550 Bitcoin to around 26,000 customers and pocketed 150 billion won. They do deny those allegations. Yonhap also reported that Upbit strongly denies the allegations. Of course they do. The investigations into the exchange operation started 8 months ago, and on Friday, the Kakao-backed exchange released a detailed explanation of what happened. First of all, we would like to express our deepest regrets for causing much anxiety aroused by the indictment. The case is related to some transactions during a 3-month period from September 24th to December 31st, noting that its exchange was launched on October 24th. Upbit explained that all the transactions in question were from when our company was preparing for and had just launched Upbit service. All transactions which took place in Upbit after that period are not related to the exchange. To the case, the exchange wrote, Upbit did not commit wash trading, cross-trading, imaginary orders, provision of liquidity, or fraudulent trading, and the company did not trade cryptocurrencies which it didn't own, or have its staff and employees benefit from such trading. Yeah, just like all of them, but I'll give them the benefit of the doubt for now, but we'll keep on that story, and we'll see what happens to those, and if the proof comes out there or not. Looking at coin market cap here, doing an old refresh, 127 billion market cap. We were at $3,885 Bitcoin. So we have dipped a little bit. As you can see, everything is kind of in the red. And when I say everything, you get what I'm saying. Most things are in the red right now. Bitcoin Cash still at 2.3% because everybody loves that Bitcoin Cash for some, it's definitely not Bitmain pumping it. I like how I got a comment yesterday, and it was like 3 paragraphs long, and they were just all angry that I don't like Bitcoin Cash. And like at the end, there's like, you're just showing how biased you are. Yeah. Yeah. Pretty biased. But I get to be, because it's my channel. So I'm biased against Bitcoin Cash. I didn't know if you guys knew that or not, but bias. Very, very biased. Yes. I'm not proud of that at all. So I don't know. Try again later, I guess. You try harder next time. Tron up by 14%. But most things in the red today as people are sort of shaving off those $4,100 profits. But we'll have to see if it goes on back up or not. Wave's taking a big hit there, 16% because of its huge rise. So the bigger you go up, the bigger you fall. Bugra coin up at almost 50%. Tron at the second place for the winner of the top 100 there. And the loser of the day is Waves, after its waves went way high, and now the wave has to crash back down. Oh God, Waves, you make it too easy, Waves. You make it too easy. Stratus down by 15% as well, but overall, still looking pretty good. Better than 3,200, because some people thought we were going to go down to 2,500. Maybe we will. But back futures on the 24th. Hopefully they don't reschedule it again this time, because it seems like every time we get close, we're like, no, we're not ready yet. Let's do it at I don't know, 4 months away. But I think, if they keep their deadline and they keep it set at January 24th, I think, the hype is going to get more and more real as it gets close to it. And it's going to cause a huge demand. Because the difference between back futures and like CME futures is that CME futures is paper trading. So, you bet down or you short it or you long it and you get paid in money, right? So they never really had the Bitcoin. It was just basically it's basically like going to the horse race track, whatever. It's like gambling. It's just betting because you don't actually have it. So I don't know. It doesn't make sense to me, but it's the way the world works. And back futures will actually trade Bitcoin, so you receive Bitcoin instead. So also back futures is like, I think, setting up with Starbucks for some reason. That's weird. So basically, if you receive a refund at Starbucks, you're gonna get Bitcoin. So that means that they're gonna have to buy Bitcoin to refund you the Bitcoin. They're gonna have to buy Bitcoin to have on hand to refund the Bitcoin and stuff like that. So that's gonna be interesting too. Also, Bakkt is gonna have to buy up a lot of Bitcoin to give out Bitcoin. People are, so it is looking good. It's pretty good, admittedly. But also, objectively, you have to also reason that, you can also short backed futures as well because they are futures after all. So you could just as easily short it as you could long it. Although I doubt anybody's going to short it just because of the hype. They're going to realize that like the price is going to keep on going after that. So that's what I'm thinking. But everybody's wrong in crypto. Everybody's wrong in crypto. Who knows what it's going to do? It's going to go into a different dimension, and then that's going to pop out sideways. It's going to go up and then down. These coins are lit, bro. JR business. Jeez. Anyway, guys, time to shield the channel. Make sure you guys like the video. It helps out a lot. Subscribe if you haven't already. Also have social media in the description below. Follow me on Twitter. Follow me on Steam. Follow me on Twitch as well, and I'd appreciate that if you guys have the time. But I thank you guys for watching this. I hope you enjoyed it, and as usual, I will see you guys next time.